You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we break down some of the fascinating and indeed crazy and indeed volatile developments going on in that other asset class, the crypto side of the fence. We're going to talk the spot, the futures, indeed the options, the vol, the SKEW, the open interest, all that good stuff. My name is Mark Longo. Of course, in this fine network, if you're just joining us for Crypto Rundown, you're missing a whole heck of a lot. So wherever you listen to this fine program, could be our website, could be iTunes, Spotify, however you get it, even a growing number of you like it on YouTube as well. Make sure you, A, head out to the platform you like it on, and make sure you leave a review so others can continue to find this fun program. And B, make sure you subscribe to the full network if you haven't done so already, because that's where all the stuff, not just this show. This show's just once a week. Listen, we got a whole bunch of other stuff coming at you. The full network is the place to get all that. We will definitely keep you busy, keep you informed on what's going on in not just the world of crypto, but pretty much everything going on in the world of options and derivatives and indeed volatility and broad general finance these days. A lot lighting it up on the old network. I know we all have some time out there and probably have a little bit of concern about what's going on in these markets. So we'll walk you through it. We'll all get through it together here. And speaking of together, I got someone joining me on the program, so let's get to it. A little bit of the old crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the program where we have great guests come on, proceed to pick their brains for the benefit of you, the listener. And joining me next on the old Crypto Hot Seat is BRYAN COURCHESNE. He's the managing director over there at Digital Asset Investment Management. BRYAN, welcome to the program, and hopefully I didn't butcher your name too badly, sir.
Hey, thanks for having me. You were close. It's BRYAN COURCHESNE, like the core of an apple and the name Shane.
COURCHESNE. Interesting. I like that. Well, BRYAN, as we want to do with all of our first-timers here on the old network, why don't you go ahead and give us an overview of your background as well as what it is you guys do at Digital Asset Investment Management.
Yeah, this is something that's going to relate to you and some of your listeners here. I started in the NYSE options pit as an equity derivatives broker and took that course for several years, then worked in the field as an equity derivatives sales trader, and then got involved in digital assets midway through its life. And then it developed into some questions and some help of some people around me and in my circle and in my financial world. And then we came to 2018 early on to building this firm, Digital Asset Investment Management, which is licensed to be an investment advisor for digital assets. for people and some institutions.
A lot of our guests came from the options world and are now living full-time or indeed part-time in the crypto space. And everyone had that moment. They had that inflection point, that come to crypto moment, if you will, that kind of lured them away from maybe the markets they were hanging their hats in and brought them over to the dark side of crypto. What was that for you out there, Bryan?
Yeah, so being in the options market, I liked volatility. We know that it's not only to the downside, but it's also to the upside. And starting in 2010, I started reading a bit about digital assets and more specifically just Bitcoin. And then it took me a little bit more research-wise to get involved. And then I planned to buy some, and this is kind of a funny story. There was a broker on the desk who, we always kind of battled a little bit and had differences of opinions on trades, and he wanted to unload them. And I said, well, this must be the right time because I like the way that these things are going. So at that moment, it was more of my research had been done for a couple years, and they were offered for sale there on the desk. I took it up, and then once I owned some, after just a few more months, it turned out that what do we have there? The government had the stake that they had recovered from the Silk Road that they issued out that some of the guys had bought in the auction. So then I knew that. I said, all right, this has got to be something good to go forward. So then I bought more, and it just became a great thing. Talked to a lot of people on the desk about it through the different broker deals I worked at, and it kind of just grew and grew and grew, and here we sit now. So it's that was the aha moment, a bit of research and then having them offered for sale on the desk and getting involved. Made it exciting.
That was it, huh? That was enough to lure you from the broad S&P world into then and indeed still nascent world of crypto.
Yeah, that's right. I still keep engaged with the volatile markets that are out there, the S&P, and especially what's going on in light now. You kind of got to have a pulse on everything, even though we specialize in digital assets, because it's going to come down to portfolio allocation, right? And this is something we can dive into deeper in this conversation, but we got to know really what all is going out there on the macro view, and then to look at how Bitcoin could possibly fit into your portfolio.
Well, speaking of those portfolios, we're seeing a lot of inquiries, and we do programming on this network. Of course, the advisor's option aims specifically at the advisor and indeed asset manager audience. We're starting to see more questions and just feedback coming in from that audience about the crypto space. It's a product category probably wasn't on a lot of their radar a few years ago, and now over the last few years we've seen the big run up, the big sell off, the crypto winter, and now the resurgence, and I guess you can call it now the kind of great vacillation, for lack of a better term, as to what we're seeing out there. What are you guys seeing out there in the RIA space? Are you seeing a lot of advisors really starting to get interested in this space, and indeed also, probably more importantly for you guys, are you starting to see a lot of nascent demand from the clients who are saying, hey, I want an RIA who could perhaps help me with this? This is a hard space to navigate if you're not familiar with it there, Bryan.
Yeah, it definitely is. So talking about other financial advisors and wealth managers that are out there, it's largely unavailable. And that's difficult to swallow. A lot of people think that they might be able to call their broker at Fidelity or at Morgan Stanley and get some allocation into Bitcoin, but that's just not the truth. There's bureaucracy involved, there's infrastructure difficulties, and sometimes you might just end up finding that they're just not properly licensed to do this stuff out there. So getting a financial advisor who could properly advise you on Bitcoin and then manage that for you largely just doesn't exist. That's out there. And then what we also see is that financial advisors and wealth managers that do get these questions asked to them generally know a little bit on the surface, but haven't done the work that's necessary to really understand the complexities of digital assets. Everything, from the basics that we might know, from the wallets to maybe even 2FAs, and then where to register and storage and the difference between cold storage and hot. These basic stuff still needs to resonate and be told to many, many people out there. And we do see a deficiency with what goes on for advisors and what's happening. So that directs traffic in our way. So coming into this year and what's happened with coronavirus and our government and the stimulus, we have seen an uptick. And if we look at this thing, it's Bitcoin. It's a finite amount. And that alone on a risk profile, it drives attraction to the space and then thus in our direction.
Well, let's talk about that a little bit, because you mentioned kind of a little brief overview at the top of what it is you guys do. But let's say I'm a self-directed investor, or maybe I'm just someone who's intrigued in the crypto space, and I've got 10, 20, 50, 100 grand, whatever the case may be, and I'm looking to dip my toes in the crypto waters. And I come to you guys can effectively manage my crypto portfolio for me. Is that kind of the main offering? I know you guys also have a self-directed offering as well. So kind of break it down for our listeners. What do you guys bring to the table? What are you guys doing for clients?
Yeah, so there's really kind of two things going on. On the people that want to manage and self-direct on their end, then we can help you out with the IRA accounts. So if you want to get into a tax advantage account, we have the ways to do that and to help you along and through. And that way you can self-trade. The other additive bonus to both of these platforms is the ability to be in the IRA and then to also be able to be in an interest account. So you can get some carry while you're long Bitcoin synthetically in your account. So that's on the one side. And then the other side is the true, hey, I have some money. I'd love allocation into my portfolio. I don't necessarily understand this stuff. I want to be under your management. I want to be educated by it. And I want you guys to manage that investment for me. So those are the two type of clients that we serve out there.
And what are the main vehicles you guys use? Let's say you want to just go out and get long some Bitcoin. Are you diving into the spot? Are you using the futures? Are you going on the options side? I mean, you have an options background. Is that where you guys start? What are the main vehicles you guys use to get your exposure?
Yeah, for most clients, we end up finding that their knowledge base is pretty basic, especially on the managed side. So in their risk profile, what we get them into is pure Bitcoin to start, and then it'll expand into the interest accounts. And there's very little in the way of options and stuff right now. It's you got to be truly top of the line to know these markets, to manage the bid-ask spreads that are out there in the options relating to Bitcoin. So we don't do that. A lot of our stuff is buy and hold as well.
So you guys aren't out there and effectively, let's say, constructing an overlay using the options against the core spot Bitcoin portfolio, just not at that level yet.
So it's not necessarily at that level for everybody. There are select clients that we do these reports for and look to get involved with, but it's not a majority of the client base that's out there, especially retail level. That's
mostly on a client understanding and knowledge level, or is it also maybe it's just hard finding the liquidity out there in some of the options that you guys like versus, your old stomping grounds of the S&P options?
Yeah, it comes down to a bit of like their knowledge base and getting them used to it first and having them have a bit of duration in the investment before we can expand them into, some other additional alpha there might be, or some call overrides to expand their knowledge. So it's more of a duration thing and getting them used to it and familiar and learning about the space and the history and how it flows to then walking them into a higher risk tolerance.
That certainly makes sense. You're already dealing with a somewhat niche asset in the crypto side of the space. Now to add a derivative of crypto on top of that might be a little bit too much for some of the clientele out there. But, let's talk a little bit about what you're seeing out there right now, what you're advising clients. We'll get to more of this in the Bitcoin breakdown in a bit, but, we're a little bit shy of the 7,000 level right now out there in Bitcoin. Obviously, we're seeing all sorts of crazy turmoil and flux out there in the broad markets and indeed in the commodity markets as well. We'll get to all that in a little bit as well. What are you guys currently advising clients in the Bitcoin space right now?
So right now, the way that it goes, I do have to give the blanket statement that we are an advisor in digital assets, and none of this is like to be construed as buy or sell investment advice, just to get that out there. If you guys do want to talk, you can get our contact and hit us up individually to go from that. But on the broader market, talking about digital assets as a whole, we are seeing great movement into this space. We are seeing old school, traditional, large bank players, individuals that are learning about it and want to get involved. And this is newer movement. And we think this is a really good footing in the space. And over the next few months, we do advise of, dollar cost averaging in and trying to build a position through this happening.
All right, let's get to that positioning then with a little bit of the old Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down what the heck is going on in the world of the leading digital asset out there. That is Bitcoin. Coming into showtime, we're a little bit shy of the 6,900 level, so pretty much at about 6,900, a little bit shy of that. So that puts us up a little bit, about 120 odd handles from where we were this time last show. But still, again, not huge movement out there in all things Bitcoin, which is probably why we're seeing such a massive implosion in the volatility out there. The 30-day realize coming in pretty hard. Remember, most of these specs and stats coming to you courtesy of our friends over there at SKEW, SKEW. Get it over there if you want to dig into all this stuff. Get it while it's still free before they start tacking some fees onto their great analytics over there. Last week, we were at about a 200% realized volatility. We were moving and shaking, but when we were anywhere close to unched on the week, guess what? Realized vol is going to come in. That's exactly what happened. It's down to a still impressive 93%, but far, far below our 200% level from last week. The 1 year realized, remember, that's going out all the way a year, so that's not going to change that much week to week. So that's about a 90% out there. The 30-day implied, that's, again, listeners, what the options market is implying overall from the prices that are going up out there. That's down a bit as well. That's down to about a 76% from about an 87% where it was this time last week. In terms of volume, a similar story. Decent pops out there. Let's start with Deribit. That's still the leading Bitcoin options and indeed the crypto options hub for a lot of you out there. Others obviously do a lot of paper as well, BitMEX and others. But for a lot of you out there, when it comes to the options, Deribit is where the action is. April 16th was the big day. Day after tax day here. What used to be tax day here in the U.S. 75 million worth of notional going up out there. The 17th, we saw 41 million. Coming into showtime today, about 26 million on the tape. So not a huge day today. But last April 16th was one of the busier days we've seen in about a month out there. So that includes the tail end of the crazy madness out there. So a pretty impressive volume out there, all things considered. Let's see. Coming into today, the big print on the week was, again, that same day, April 16th. It was a weird one. Looks like a straddle, the 4,000 straddle. If you're not familiar with what a straddle is, listeners, it's the put and call on the same strike. In this case, it was the 4,000 strikes. So you saw the 4,000 put and the 4,000 call trading back on April 16th, 449 times each. It's about 900 total contracts going up for 0.0529 and 0.4859 Bitcoin respectively. I think you can figure out which one's over there. It's going to be the call, of course. That's right, done right when Bitcoin was at 7,023. So not that far from where it is right now. Again, we don't have a side on this. We don't know if they were buying or selling. If they bought it since last week, they're probably not looking that good. But again, this is September. They got some time for this bad boy to play out there. In terms of today, what the big trades are out there, it's the April 7500s have gone up a whopping 175 times. Again, remember, it's not a huge volume day out there. It's followed by, this is an interesting strike, the June 2500 puts, trading today about 150 times out there on Deribit, and also the May 9000 calls, 138 times. So interesting paper afoot out there. All this paper is translating into a skew that's around roughly what we saw again this time last week. It was 12% last week, this time down to about 11%. So pretty much unched. Again, that means the puts still leading the dance out there going forward. I know, Brian, you said you mostly play in the spots. These levels, we're talking about the vol, the open interest, the volume, the skew. Does it bring you back to your old S&P options days, sir?
Oh, it definitely does. Yeah. In fact, my most memorable one when everything kind of blew out was in May 2010 when the flash crash kind of happened and the meltdown went down. Yeah, all these things you looked at them, but you couldn't really manage them, and it was a quick lesson. And to tie it back further, when you opened up this segment talking about all the numbers and volatility, something kind of interesting here, even though we're really just playing the spot, is that this consolidation that we're having in here is just reaffirming a new higher base out of any year that we've ever had with Bitcoin. And that matters. And as these guys go and they expect new volatility, well, that kind of affects us a bit too, because we play in the interest account market. So when you might be long Bitcoin in your account and you put it out in an interest account and you're gaining some yield, well, where's that yield coming from? Well, that yield's coming from lending it out to guys that might be playing in the derivatives. So all this stuff you see right now, and as you said, just comes and ties all the way back through, right back to spot.
Now, you mentioned, the vol is coming off, obviously, but it's still a fairly volatile instrument. Even anywhere around 100% is still a pretty volatile instrument. Does any of that give you pause right now about getting new clients into Bitcoin? Because they're going to see some swings. I mean, we just saw, a few weeks back, intraday swings in Bitcoin of about 30%. Does any of that vol maybe give you pause about getting new people into the product now until it quiets down a little bit? Or are you still comfortable at these levels and at these vol levels getting new clients into Bitcoin?
So that's like an isolated event, and it's great that you brought that up. It was good to actually see that happen. I think it tested a lot of the systems that are out there that do these leverage products to see where margin calls and stuff might have been. What that did was we were able to talk to clients on the back of that might have felt shaky and insecure about the vol really spiking, and say, hey, listen, like this is how it performed. All the companies held together. There was no defaults that went on. Nobody had to step in. No government had to come in and rescue Bitcoin during that event, right? So it actually, I feel it helped, and it drove more people to us and in this space, seeing how well Bitcoin handled through that drawdown.
Now, I'm curious, this was a pretty contentious topic for us here on the show. A lot of our listeners, particularly on the crypto side, got up in arms about it. I'm curious, you come from a more traditional financial background as well, so I'm curious what your thoughts are. When all of that stuff was happening, the big intraday swings, plus or minus 30%, there were a lot of calls out there for some sort of circuit breaker like we have in the traditional asset markets in crypto. And of course, the people coming from the crypto world were just appalled by that notion. It's contrary to the decentralized nature, the entire ethos of crypto. But people coming from a more traditional financial world say, yeah, that makes some sense. I don't want my clients subject to 30% intraday swings. I'm curious, so where do you come down on that debate, sir?
I don't think there should be a stop trigger in there. I don't think there should be a circuit breaker. I think that this market needs to operate 24/7 globally and be unrestricted. And what's really interesting about the circuit breakers in the capital markets is that it's just kind of this reaffirming thing where there's no circuit breaker to the upside, right? There's only to the downside. So, are we constantly putting an artificial base in the capital markets? And is that something you should trust? Because eventually some way will be found to get around that stuff. And being in Bitcoin, that's truly decentralized and trades 24/7 around the clock with no restrictions like this. It's truly a complement to in itself of something pure that you can get that's finite.
There you go. Interesting. I thought you might have a different take on that, but it sounds like you're in line with a lot of the players out there. Let the dice fly high, as they say. Up or down 30%. Let it roll out here. Let's look to see what's rolling from a call to put perspective out here, and it's pretty much unched. We're seeing the puts still out there leading the dance, about 62% out there. In terms of open interest, we're seeing, let's see where we are, kind of similar to where we were this time last show. Coming into the showtime here, we're seeing open interest total at, let's start with Deribit, about 533 million. That's up even from the average, which is about 508 million, down slightly from last year, but not a ton, and they've maxed out. So they're still pretty robust. They've maxed out recently at about 638 million open interest out there. So interesting stuff overall from a overall perspective. And interesting stuff out here as well with, again, the call put I just gave you earlier, that's from the overall open interest out here. So we're seeing 62%, I should say, to the puts, which again is kind of strong, very close to the max. The minimum is about 0.42, so about 42% out there. So we're at the upper end of that range, and that's reflected in that SKEW number as well. The puts are still fairly firm out there. Let's look at some other open interest numbers here really quickly. The number 2 spot, still a fight between LedgerX and OKEX. LedgerX squeezing out the number 2 spot there, about 35 million. OKEX right behind them, 33 million. CME, number 4, 11 million. So that's ticking up. Better than it has been. That's about their max, actually, right now. They've averaged about 7.8 million, so they're at their max pretty much right now. So a little bit of growing paper out there for CME, and backed, unfortunately, 50,000 OI. Not really a big month for them. If you're wondering where that paper is aggregated, this is across all the venues now. The big month they still like their quarterlies out there. In June, leading the dance with about 32, almost 33,000 contracts open out there. April coming in pretty strong, though, about 26,500. Everything else a distant third behind it. You got SEP at about 11,300. And then the rest kind of falling off there. In terms of CME, Bitcoin options, I mentioned, decent OI out there right now. A lot of that coming back on the 15th. You saw nearly 2 million worth of notional going up then. That was kind of the big day. So that's responsible for a lot of the OI we're seeing on the board right now. The rest of the week, shy of 1 million. Today, coming into Showtime, or Friday was, I should say, was shy of 500,000. But the big day was about 2 million. That was back on the 15th. So tax day, driving a lot of paper out there. In terms of the futures, over there on CME land, kind of a different story. Light paper, about 4,000 contracts on the tape coming in today. Friday, a little bit north of 2,000, so extremely anemic there. Thursday, 7,000, and Monday, about 6,000, and kind of the rest kind of less throughout the week. Our old friend, the Backed Volume Bot, breaking down the week here in Backed. Looks like the futures, total traded contracts, 1,420. So actually giving some contract numbers, and I like that as opposed to just notional, which notional is about 10.1 million or so. That puts it up about 2%, and the OI is about 5.6 million. That puts it down 4% out there. Again, a lot of people waiting to see what Back's going to do with all that money they've been raising. You know, this is kind of interesting one here, Brian. I'm curious as well. Coming to Showtime, we saw some news coming out. I believe it was CoinDesk who broke this down. Actually, they talked to Coinbase, I believe, because everyone's getting these stimulus checks now for $1,200. And sure enough, Coinbase did a little bit of digging into their platform, and they found that they had a spike in deposits worth $1,200. Go figure how that amount plays out. So apparently a large spike for their overall number. That's not a volume and value amount you see normally going up on their platforms. It's probably easy to find those out there. And they spiked pretty firmly. So people, Brian, apparently taking their $1,200 from the government and putting it to Bitcoin. What do you think of that? Have you seen a lot of stimulus action over there in your neck of the woods, Brian?
You know, directly with us, not necessarily, but talking on that topic, it does make a little bit of sense. I can't say that I advise that for everybody, but people that have the suitability for it, if you're looking to hedge out of your dollars, I mean, you get that money right away and you direct it and flip it into Bitcoin, right? Especially with the money printing that's going on. So you can kind of see the reasoning that's there for it. But again, it's got to be suitable on case to case. Interesting that they have that data though, and they can pull it right there at time, and it matched up dollar for dollar.
Yeah, that is pretty fascinating. Just goes show you an interesting data point. I wasn't planning on crunching. I never even thought about it, that people are going to take that stimulus money. But I guess if you don't need it right now to pay bills, and you want to put it in crypto, have at it. But we have to talk about this, Brian. Come in today's show. Just on our last show, people were all up in arms about it. It's kind of the big story dominating the broad markets out there right now. It's what's going on in the crude space. It's just crude oil getting annihilated. That front WTI, which is, of course, the main U.S. crude contract here, listeners. That front contract, which is going out tomorrow, people were so eager to just dump their WTI to avoid having to pay for storage and everything else, which is going to just add more cost. So they crushed that future, which was around the $20 level not too long ago, all the way down to effectively zero, even negative. If you had a listener asking if it was going to go negative, below zero effectively, and if that's even possible. And I said, in a normal environment, I would say, no, that's insane. But these are not normal environments. Crazy things are happening. We did see it go negative ever so briefly because, again, the cost of having to take this stuff and store it exceeded even that. So that they were willing to take the hit there. So it's insanity. We're seeing a lot of people in the crypto space kind of doing a little bit of a nana boo-boo action, kind of waving their fingers. People have been talking for a while about you should diversify out of those commodities and into crypto, into Bitcoin in particular. So we're seeing a lot of people looking at these levels, like when WTI future was trading $1 and saying, oh, I could buy a whole bunch of WTI barrels, or I can buy one Bitcoin. Look how much I can trade one Bitcoin and get hundreds of barrels of WTI, if not more, out there. It is worth noting that's that front contract that's going away in a day. So you're getting those barrels of oil exposure for exactly one day. So, but you could, if you were so inclined, trade in that one Bitcoin, which, like you said, is a little bit shy of that 7,000 level, and put that 7,000. That'll get you a lot of one-day WTI exposure. But that just shows the insane world that we're living in, listeners. These levels are pretty much, the lowest since the WTI contract kind of came into existence. 44%, levels earlier, not seen since 1986. Now we're just going into the prehistoric era in terms of what's going on out there. And again, the big question, everyone's looking at the term structure. I don't get too deep in the weeds on crude oil. Let's save that for some of our other shows. But still, I don't know, Brian, this is kind of an interesting thing to see the crypto space kind of looking at the crude oil space and kind of doing a little bit of a shaming out there, which they are wanted to do. But B, also looking at all these ridiculous multiples of how many barrels of oil you can get right now for one Bitcoin, Brian. It's kind of insane.
Yeah, it is. And what's funny is that, people that are in those commodities that might not have been in Bitcoin or digital assets have always pointed the finger and said, oh my gosh, look at the drawdowns that you guys go through. This event shows that this can happen in any asset class that's out there. And you should be looking at diversifying out and seeing what maybe digital assets you should hold instead of all this commodity and crude that's out there. It is interesting to see as it plays out, and definitely talking to clients about how this works and how you correlate it over. But the aspect of selling a Bitcoin and buying that many barrels of crude oil for a one-day contract is it would be a tough one to pitch, not something we advise in doing, but it is funny, the analogy of what you could look at.
That's not front and center for your recommended trades right now. They're trading all your Bitcoin for exponentially more WTI. But, this brings up an interesting point. For a long time, people on the crypto front were selling this asset class as effectively some would say negatively correlated. I don't think there's a lot of data to support that, but a lot of people were selling it as effectively an uncorrelated asset class, and therefore a great diversification tool for a portfolio because, as we've seen, when markets get crazy, we just saw it play out over the past month, correlation tends to move to one. What was happening when the broad equities were selling off? Gold was selling off. Crude was selling off. All these traditional diversification tools were selling off, which is not what you want. You don't want all your assets moving in lockstep. Now, unfortunately, Brian, what happened along that same point is that this supposedly uncorrelated asset known as Bitcoin actually sold off quite a bit as well. So we saw a lot of people coming on this show and in our audience kind of writing back and just saying effectively this was what they termed, the great disappointment of Bitcoin. It wasn't living up to the hype as this uncorrelated asset. I'm curious, what are your thoughts on how Bitcoin played out over the past month and change? Were you in that same camp? Were you disappointed with the actual correlation that we saw, or were you maybe less surprised by that? A, and then B, well, what were your clients saying? Were they coming to you for an uncorrelated asset and then seeing it selling off 30% with the broad market? Was that impacting your clients as well? What were you seeing out there?
So the uncorrelated is really the way to look at this into it. And then, as you said in it, as the markets get more volatile and really have big swings, the correlation comes up. And that was against any safe haven. So when we had clients come in, they generally do look for there to be a disconnect and for Bitcoin to move inverse to their typical portfolio. And that's where we got to just reaffirm with them that it's more of an uncorrelated asset. It's a diversifier. It's an alternative store of value. And then when these spikes come in volatility where it starts to move along with and develop some correlation there, we got to tell them that this is just macro. People are just flighting to safety, and all markets are getting any risk asset that's out there is really just taking the brunt of this. Be patient. Let's reorganize and let's see about, do we adjust your position a little bit? Do we add more to it? But stay strong. It's happening across all risk assets, not just Bitcoin.
Yeah, it has to be a tough call with the clients when they look at the asset class that's supposed to be uncorrelated and it's down 30%. It's outpacing the market to the downside. Clients tend to look dimly upon that. So it must have been some interesting times for you. Interesting time for us as well to keep on rolling and explore what's going on in the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. This is indeed the portion of the program where we break down what's lighting it up out there from a broad altcoin perspective. Let's break it down here. Coming into showtime, I'd like to start with the top 10. Of course, take this top 10 with a huge grain of salt. The overall valuation numbers, like we said, could be very distorted, but the rankings have a lot of merit and a lot of value. And so coming into showtime now, we're seeing the old Bitcoins once again at the top 10, number one spot with about 126 billion out there. Number 2, ETH, a little bit north of 19, about almost 19.1. XRP, about 8.1 billion. Number 3. Number 4, Tether, 6.4 billion. Number 5, Bitcoin Cash, almost 4 billion even. Let me drop off a little bit again. Number 6, Bitcoin SV, 3.4 billion. Number 7, Litecoin, 2.6 billion. Number 8, Binance Coin, hot on his heels, right about 2.4 billion. Number 9, EOS, 2.3 billion. And around out the top 10, the old Tezos with about 1.5 billion out there. Looking at the altcoin, how they stack up from last show, we're seeing some interesting times. ETH actually getting a little bit of a lift out here. It was 154 and change on the last show. Coming into today's show now, we're seeing ETH at about 175 and change. That puts it up pretty firmly, about 20 handles from where it was this time last show. Let's get into the nitty-gritty of some of the metrics out there, as well as the analytics. The realized vol out there, same deal. It's moving, but not enough to sustain the astronomical levels of realized vol. It was nearly 250% on our last show. That's a ton of actual volatility. No asset class can sustain that for very long. And even though we saw about 20 handle move in ETH, that wasn't enough. It's down to a paltry 122%. Still, comparing to other asset classes, that's a ton of realized volatility, but off the frothy, ridiculous highs we saw from last week. Implied vol, same deal. It was 110% or so last show. Now it's down to a still very elevated 95%. But again, we're not moving in the stratosphere of what we were not too long ago. So that's why those numbers coming in a little bit. The ADV is down to about 2.1 million a day. That's down from about 2.3 million. ADV, of course, listeners, for those who aren't in the option space, average daily volume. And that, of course, was around 5 million not too long ago. So we're seeing some come down from the highs of the mid-March frenzy out there in ETH options. Still a pretty decent week out there, all things considered. The 16th, the day after tax day here, was the busiest day of the week with about 2.8 million worth of notional on the tape out there. The SKEW out there, 30-day SKEW, pretty much unched, right about 8%. Again, showing the puts still leading the dance out there. In terms of OI, we're seeing the net OI. It's about pretty close to where it was this time last show. It's about 44 million. If you're wondering, the max it's ever been is about 47 million. So we're pretty close to that right now. We're pretty frothy from an OI perspective, and it's average about 36 million out there. Again, this is on Deribit out there right now. Moving out to Ripple, it's down a little bit. It's down about a cent from where it was this time last show, about 18.4 out there right now. Bitcoin Cash up a little bit, up about 270 from last show, but still not a huge move for that one. And Bitcoin SV up a whopping, about not even a point, about 0.8 or so from where it was this time last show. Brian, when you guys aren't out there talking Bitcoin with your clients, I'm curious, are there any altcoin that are on your radar and that your clients are interested in right now, sir?
So when it comes to altcoins, it's a unique case with us. We see kind of two things. One, it's either some interest in an old STO or ICO, like kind of cleaning up the mess of some stuff that's happened in the past through that whole run up and kind of trying to unwind those. And the other interest is in more of the stuff that's in like the top 5. And when it comes to the stuff that's in the top 5, we have our due diligence that we do on these coins. We have our recommendations that we do with them with clients. And it really comes down to a case-by-case basis that's really derived from the client's profile, their knowledge base, and what they're looking to do. So it gets unique, but we do look at them. It generally just doesn't deviate much from the top 5.
And we don't deviate much from your questions. It's time to answer them. It's time for your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions segment, the portion of the show. You guys take the reins and bring us into all sorts of interesting directions. Brian, this first question from Jack sounds like it's right up your alley. Jack wants to know, do you see a lot of asset managers and RIAs piling into crypto? Now, I'm curious, Brian, what are you seeing out there? Are you guys kind of the only of the Mohegans right now?
Hey, Jack, thanks for the question. So we see interest from other advisors and wealth managers just kind of dabbling because their clients are asking, but we don't see them making the full move into being able to actually acquire the assets and manage those for their clients. So what we've been doing to set up for them is to work underneath them as either a third-party asset manager or a sub-advisor to then help that primary advisor be able to offer his direct clients digital assets.
One of the things we've seen a lot of interest in as well is a lot of the people on that side of the space, because they have been getting, trickling client demand for a while. It probably started when Bitcoin was around 20,000, petered out for a little bit, then came back strong over the course of the past year. Is, for a lot of these guys, and certainly you guys understand this, they have to live in the regulated world. And so they can't go play on a BitMEX or a Deribit and go gobble up the spot. So the notion of first SIBO and then CME both getting into the regulated space and then backed and others now with listed regulated futures contracts and now options in the case of CME, that has opened the doors for some of these RIAs who can't play in these other venues. Now they have a listed futures. And now future is still maybe a bridge too far for a lot of your traditional RIAs out there. But maybe if you're a CTA and you want access to this, it's certainly something that's interesting. Have you seen any of that, Brian? The addition of these new listed contracts. I get it, they're derivatives, but they're listed on an exchange people have actually heard of that is actually regulated here in the U.S. Has that helped foster any demand from the RIAs out there?
So what we saw, and this is just new and developing, and it might just be a word in a filing, is that Renaissance Technologies redid their filing, and it noted in there that they were going to open up on the CME. So this being a very prestigious and almost a black box traditional trading firm is now getting involved. So we think we're definitely going to see more registrations come down from institutions to offer this. But those institutions are generally only for high net worth or for endowments or for pension funds. But as that starts to happen, I think the trickle down starts to happen all the way through to FAs and into retail.
It'd certainly be interesting to see. The products are starting to get out there, not getting a ton of traffic yet, but they're available now if you are indeed an asset manager and you need some sort of regulated product to provide to your clients. They're there. You don't have to go tunneling in through a VPN to some international exchange anymore. All right, going on to next up, we got a comment coming in here from Freddie, Fred E. He wants to say, with what's going on in the real commodity markets, it makes Bitcoin seem pretty tame by comparison right now. WTI, what the heck? We were just talking about that, Freddie, and everyone else out there. The quote-unquote real, I like that. The quote-unquote real commodity markets, certainly pretty volatile. We've seen gold moving a lot. We've seen, of course, WTI moving a ton. There are serious issues with having to hold a physical asset right now that you don't see in the Bitcoin space. There are advantages to being all digital. Now, there are downsides to that, too. We've seen it with some of the hacking and other issues, people losing their password, losing access to it. But in general, right now, physical storage is a burden and an expense and a cost that is causing all sorts of disruptions, particularly right now in the crude oil space. So you're right. It does make some of these things like Bitcoin that were moving 30%, it never went negative, that's for sure. So you have that feather in your cap, crypto fans out there. It hasn't gone negative, at least that I'm aware of. Maybe in the early dark days, maybe it did flip negative, but in recent memory, haven't seen negative Bitcoin, and don't think we will anytime soon out there, unless we get some crazy scenario with the miners and what's going on with power and everything else like that, maybe. But outside of that, I don't see a lot of scenarios that would really drive Bitcoin negative. You don't have that same storage issue and there's other latent costs that you do on the physical commodity side. Nudie, here's an interesting one as well. I wants to know, why don't more brokers offer Bitcoin and even ETH on their services? Why am I stuck with the Coinbases and the Krakens of the world? Is this a question you get a lot, Brian, from your clientele as well? They come to you and say, I want to trade these things, particularly maybe in the self-directed accounts, but they can't really use a lot of the major platforms that they're used to? Or are you starting to see a more, shall we say, opening of their a little bit of breaking down the walls over there in the traditional brokerage space when it comes to crypto, Brian?
We definitely still see, and I think we will see for a long period of time, that these big brokers, warehouses, Merrill Edge, typical trading platforms will not offer digital assets. And the reason being for that is that there's a lot of education that needs to go on. They would have to be able to offer it to every single client. They just can't go out and selectively offer it to clients. And they would have to train a lot of people to be able to handle this space. And we don't see them taking the risk on doing that and changing their compliance and their filings anytime soon. So we definitely see a lot of why doesn't my platform offer it? And then us going into the explanation on why.
Yeah, it is kind of a bit of a minefield out there when it comes to the quote-unquote major established brokers out there. TD was pretty forward-thinking on a lot of crypto. They were, of course, involved in ErisX. Now with the Schwab merger, that's been a big question mark. We have seen other brokers dabble in it. For example, Interactive Brokers, you can trade the futures over there, but that's kind of about it. So it kind of depends on the platform and their own risk tolerance, what they're going to let you trade. But in general, yeah, there's not a lot of broad adoption yet, unfortunately, a lot of these quote-unquote major platforms. In fact, we had some guests recently talking about how to do that, maybe try to make your assets available across. So you have the same pool of assets. You could trade crypto one day and then go sell your options in Apple the next day if you were so inclined. It's still a lot to be done there, but that's an area a lot of people would like to pursue. And hopefully, at the end of the day, you want to have access to one pool of your assets that you can use to trade however you want. And we're not quite there yet, but perhaps someday. That's why the listed products are so important out here to Nudie and everyone else, because that allows these brokers and asset managers to utilize these things. As fun as the Deribits and the BitMEX and everything else are, for a lot of these big platforms, they're not going to access those. So they need something that's regulated here in the U.S. where the lion's share of their clientele is, and certainly for the large institutions, they definitely need that. So the more volume these products can get, the more traction you guys can have on products that you guys want to trade, and hopefully see them listed on your major platforms soon. All right, let's wrap it up here with got good handles this week. Jelly Beans with a Z. Jelly Beans wants to know, do you think the halving effect will be lessened by the turmoil in the rest of the market right now? Seems like Bitcoin should have been marching upward now instead of hanging out here. Well, if you're wondering, listeners, the halving is approaching. We are a mere 21 days and 12 hours from the big event. Of course, everyone made it sound like this was kind of a done deal, the exact price path that Bitcoin was going to take leading into the halving, because we'd seen it before. We've seen it play out in other assets as well on the crypto space, Litecoin being one of the more recent examples. Everyone thought it was kind of a done deal that Bitcoin was going to do the same thing. And so far, at least, not so much, which kind of makes it interesting. And I think Jelly Beans has an interesting point here. You know, you can't just take these things for granted. Still, we have time. It's still, not quite a month, but we're getting there. So that could certainly maybe provide some support in the near term for the bulls to rely on. But it is an interesting point. We haven't seen the massive run-up, at least not yet, in all things Bitcoin that you have seen in other asset classes. And we saw in Bitcoin in the past leading up to halving as well. If you don't know what halving is, listeners, look it up on some of your major platforms. Brian, I'm curious for you. This has kind of been a big talking point in the Bitcoin space for some time. This halving event, this was going to be a support for the bulls. It was going to drive us north. Is this a key pivot point that you're looking at? And are you perhaps agreeing with our listener here, Jelly Beans, that we haven't maybe seen the price action that you would expect so far this close to the halving event?
It's been a key point for us. It started almost a year ago, really coming into this and positioning and looking like how we're going to do it and what we're going to advise clients on doing and managing the accounts into the event. But no one expected COVID-19 to come out and really devastate the markets like this. And you said it, and so did Jelly Beans. The story was right. It looked like it was setting up for a true bull run, probably for a couple of weeks right up into the halving. But now a lot of the gas of that's been just taken out. And that's unfortunate, but we will move forward. The halving event is big. It is big. This is a finite supply in Bitcoin, and reducing the reward really has a drastic effect on it, and it should be for the better.
Unfortunately, it's not for the better. That music means we're done, Brian. We came all the way through our crypto journey. By the way, mentioning brokers, of course, we had TradeStation Crypto on the show not too long ago, and they're the ones who are trying to offer that merging of traditional assets with crypto assets. Obviously, that's a separate firm, but related, obviously, so you still can't do everything you want there, but it's the closest we've seen, and probably one of the more deep dives into crypto that we've seen from an established broker out there. So if you are indeed so inclined, like our listener, Nudie and others, you're interested in something like that, maybe TradeStation Crypto, listen to the show we just did with them not too long ago. Maybe that's something that's up your alley as well. But unfortunately, that music means we have to go. But before we go, Bryan, if our listeners are intrigued by everything you were laying down here on the show, they want to contact you, maybe have someone manage their crypto for them, maybe they're self-directed, if they want to talk more about halving or your general outlook on all things Bitcoin, where should they go? What should they do, Bryan?
Yeah, you can start by the website, which is DAIM.io, which stands for Digital Asset Investment Management, and that's .io. You can reach us on our email, hq@daim.io, or you can call the general office number, 949-298-7582. We'd love to help you out.
There you go. Reach out. Maybe you want to talk halving. Maybe you want to talk options in crypto. Or maybe you want to talk about what's going on out there in the spot. Maybe you just want to vent about the correlated / uncorrelated nature of the asset class. Either way, hit them up over there. The website, I should say, is DAIM.io for Digital Asset Investment Management. And on behalf of Bryan and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep them coming. Stay safe out there. And we'll see you back out here throughout the rest of the week on the network. We're pretty busy, of course. We got Boot Camp back. Going to hit that live tomorrow. Got Options Playbook Radio on Wednesday. Of course, Thursday, diving back into the commodity space with Twifo. And once again with Options Boot Camp. Friday, Volatility Views. Then it all resets again back next week for Monday for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.